All right, good morning, everyone. Richard here, and welcome to the Wednesday edition of the Ninjacators Morning Bell. Right, guys, as you all know, it'll be a shortened trading week due to Thanksgiving being tomorrow. That is, your stock markets will be closed. I believe they are open again on Friday, but probably going to see a lot of reduced liquidity in the market. So, obviously, with everyone taking long weekends and so forth. So that is obviously what's to be expected. So just a quick note, there won't be another morning bell session on Friday. Also taking some time off on this side over here. Right, quick look at the economic calendar for today. We got the flash services PMI at 9:45 a.m. EST, but I think most of the focus will turn to the FOMC meeting minutes at 2 p.m. EST today, which might offer clues on the outlook for inflation and the potential pace of future interest rate hikes. So this is the biggie one for today. Obviously the markets, especially the indices, all been rallying as of late, as we've expected, but it'd be interesting to see how the markets react to today's news. Okay, all those meeting minutes, obviously that was for the previous month's meeting that the Fed had. Right, quickly before we look at the ES on that black background, just a quick look at the bigger picture again for the ES and where I believe we currently might be in this phase of this downward move that obviously started in the beginning of this year. I still think that there is more, or there could potentially be another leg lower to follow to then potentially complete a WXY, or what we call a ABC double zigzag pattern. So I'm currently viewing this bounce that we're seeing to the upside as a relief rally, corrective within I wouldn't say a bear market just yet. I'm still viewing this entire move lower as a corrective move. So this B wave over here is what I'm thinking is happening over here, with potentially another move lower to follow. Right, that being said, let's look at the daily. We've previously, I previously said that we have a resistance zone around about the 61.8 retracement, and this is measured from this high in August to this low that appeared around mid-October. And then we also have this median line, this green line sloping to the downside, around about 4,069, 4,100-ish, where price might reverse from. And potentially give us that B wave that we've been potentially expecting, right? So potentially seeing an A, a B, a C to complete that B wave, and then we get that final last move to the downside. Well, that is obviously my assumption. The markets will do what it wants to do, but that is still the view. We did expect a bounce around about this area before price reached it, and we did get that very strongly to the upside. We then had this sort of zigzag behavior to the upside, which I'm currently treating as an A and a B, and then this potentially being that last C wave. Now, if we just look at this leg that higher, that started again after the small correction here on the 3rd of this month, then it also does look like we had a clear 1, a 2, a 3, and all this potentially now just being a 4th wave correction, whether it's ended or still needs to end complete. We'll have to wait and see. We should know pretty soon enough, I think, especially with today's FOMC meeting minutes being released. And then potentially that last final wave higher into this area, and like I said before, price did not reach the center median line of this green downward sloping pitchfork like it has previously here in September. It's also quite common for price to overshoot some of these lines or undershoot depending on which direction you are looking at or trying to trade or forecast, but potentially expecting another move higher to complete the 5th wave, and then completing this entire move and then get that move to the downside, if that makes sense. All right, so price only just pretty much reacted from the 61.8 at the moment. Could still head higher to about 4,007-ish, and if it does even head higher than that, then the next resistance around 78.6, around 4,163. That's just the retracement ratio, right? Now, we quickly had to look at the volume profile. You'll see that there's quite a high volume node, or two of them, around about this area, where price is currently also sort of stuck. A lot of markets, except for the crude oil, which has been moving lower quite strongly as anticipated, but the ES, NQ, and gold all sort of like entered a bit of a sideways range, and this is probably just because of investors waiting for these meeting minutes today. So I do expect potential another high. How high that might go, who knows? But from where price currently is, I still expect over the coming trading days for the ES and also the NQ to make another high. So we have these high volume nodes here where price is sort of bouncing up and down in between. Should price clear this, let's say, the sort of resistance zone that I've put up here, then at 78.6 is where we also have a high volume node, which could also act as resistance and then potentially see that move down to the downside. Now, assuming that this is some sort of an A, a B, and a C wave, then your C waves typically travel the same distance as your A wave. And to measure that, we could simply take fib extension tool, measure it from this low to that high where I believe an A wave ended. And it gives us a 100% extension just below that 78.6. So there is some room still to the upside. Again, we'll just have to wait and see how the markets we are following do react to the FOMC meeting minutes today. Who knows? Maybe it's a non-event and everyone's just getting ready for, a long weekend in the US. But be careful if there's reduced liquidity for potential volatile conditions. All right, that's the ES. Let's have a look at the NQ. Similar sort of price structure that I'm seeing here on the NQ. I'm actually, it's a bit cluttered, this one, but anyway, I'm trying to just open this chart again. My NQ, as always, being very stubborn. It's not easy to maneuver the chart. In any case, also expecting that we potentially need to see one more wave higher on the NQ. We've had this area around about 11,930 to 12,025-ish, where we've had a confluence between a median line sloping to the downside and a long-term median line sloping to the upside. And price did breach that, failed to close above it, moved back again into this zone that we've seen here previously. That I've had on my chart for a while, now acting as support. So potentially now I have to just color that green. Green for support, right? Red for resistance. So if we see a strong move below the 11,505 sort of area with a close on the daily below there, then I think a high is in. But similar to the ES, I'm still seeing this as an A, a B, and now a 5 wave. C, we've only seen a third, a potential end of a fourth, with another 5 to follow to complete that potential C wave before the next move lower potentially follows, right? I guess this also does sort of look like a bit of a skewed, inverted head and shoulders pattern, but it is what it is. If you look at the neckline over here, and then this left shoulder and this being the right shoulder, then price already exceeded that neckline, but not done so by much. But in any case, still in the bigger picture, still thinking same on the NQ, because these indices do follow each other very closely, to expect potentially lower prices. Again, we'll probably have a better idea of where price is heading by the end of today. Again, the FOMC meeting minutes will only be released at 2 p.m. Eastern Standard Time, so it's quite a few more hours to go before that is released. All right, let's quickly have a look at CL, crude oil, which which is now set to the January 23 contract. And here we have that situation where price has stayed within these boundaries for multiple years of these blue channels that I've had on my charts for a very long time. We had this little area over here where we expected a bounce to appear. That did happen. Price pulled all the way back to a center channel line, got rejected. We look obviously at the crude oil on the black chart again, but you see that price moved back up, potentially giving us an ABC, and came very close to breaking the September lows. I think that is still a possibility. Price also extremely close to this low median line of the shift pitchfork that's been tracking this entire decline to the downside. So with this channel, these blue lines being broken, that could potentially, in my opinion, mean that crude oil could move much lower. But for that to happen, if we get a close on the weekly below this low median line, I would say that there is quite a lot of space to the downside for crude oil to decline even more. All right, let's look at a little bit of a closer view. There we go. So previously, this is that little zone that I talked about before. We had confluence between this low median line, this green line, and that upward sloping channel line, where they all crossed. Price moved in there after a 5-wave sequence. We had a bounce higher, resistance again at this channel line. Again, these lines were on the chart for quite a long time, and they're still acting as support resistance. In this case, though, we've now finally seen a break below it. Now, recently, when was this? On Monday. Strong move lower. The lower range of the day tested this low median line and reached that projection around 76.03 that we were talking about, and it pulled all the way back up and closed near the highs of Monday's range. But then since then, on yesterday, it's been retesting the channel line, this blue one. This could be what we call a kiss goodbye. A kiss goodbye would be something like this. You have a price move above an area. Sorry, let's say like this. I'm trying to get my drawing tool. Let's say price moves below an area, retest it, and then you get a what's its name, a rejection from it. So similar thing over here, failed to hold, breakdown, retest, and we could potentially now be seeing another move to the downside. Okay. Now what I'm seeing here though is that this looks like a 3-wave move thus far. Beautiful 1, a 2, potentially a 3, and that this was maybe a 4, and in price potentially going to make another low and potentially break these lows that were set on the 26th of September. So price hasn't reached that yet. I just quickly want to put my line marker on there. Where is that gone over here? So potentially could still see a move towards 74.60. But if we get a 5-wave sequence into a new low, be careful because we might see another pullback then to the upside. But in the overall picture, looks very weak, right? It looks like crude oil is getting ready again to go test these lows we set on Monday and then potentially break these lows at 74.60. All right, let's quickly look at gold. And then we'll end today's session. I do have to go attend something at home rather urgently, so I can't go on too long for today. But as always, if you guys got any questions with regard to any of this analysis, then please fire away there in the chat box and I'll be more than happy to answer that for you. Also, the sessions are recorded, so they'll be available on our YouTube channel, Ninjacators YouTube channel, in case you do miss any of these sessions in the future. All right, gold's obviously been an absolute mess since price made an all-time high, August 2020. I'm still viewing, or I would say potentially have to start considering that we've seen the end of an A, a B, and a C, i.e. a expanded flat, not a normal zigzag, but where rather what we call a 3-3-5 pattern, where your C wave traces out in 5 waves. Now, again, you'll see that a common thread in all of my analysis, that if I think I'm dealing with a correction, I love using my shift pitchforks and basically anchor them at a high point. Sorry guys. And then my second anchor point at what I think might be an A, and my third anchor point at what I think might be a B. Because corrections are obviously not, they don't decline very sharply like a trend would, or, go up or down depending on what direction you're trading. But in either case, it's worked really well all the way down, even offering, support over here, resistance, support over here. And there was at this stage where we had a beautiful 1, 2, 3, 4, 5 wave movement into this low median line. And that at that stage, when was this? In July, I was saying that could have been the end of it, but obviously it wasn't. We had another move to the downside, and that changed the view a little, but not invalidating the entire outlook for the potential expanded flat pattern that I've been following, but rather that the last fifth wave over here was in itself potentially trading or tracing out as an ending diagonal. Although the final fifth wave of an ending diagonal, one would normally expect price to undershoot. One should not say normally expect, but it does happen quite often, where your final fifth wave of an ending diagonal, in this case a bearish ending diagonal, you see that last little wave just pipped this lower trend line of the shape of the ending diagonal, and you're going to move to the upside. In this case, this didn't happen. We had a very short potential, I would say, fifth wave. It's not 100% that it was, but we did expect a potential bounce higher. I still thought the price was going to move low, but eventually price very strongly broke back to the upside. Obviously the dollar index also hit those areas we were looking at previously and moved lower. So that's why it's cool to always have a bigger picture view of very important support and resistance areas, and then you can formulate what pattern you might be dealing with and where price might be moving towards over the next coming days, or potentially even weeks and sometimes months. So the recent move higher found picture perfectly resistance at this dashed median line over here. Now if we switch to the black chart again, you can see that we've identified that same little area around 1787 to 1799, call it 1800, that price might find resistance at. Had a strong decline down to the downside, and since price broke above this upper boundary of what I believe could have been an ending diagonal, I would now expect something like this to potentially happen. An A, a B, a C, potentially finding support around about the 61.8, maybe even higher. But for us to measure, determine where price might find support, assuming that this was potentially a wave 1, and that this is potentially a wave 2, and with potentially something much higher to follow, just giving you sort of a trace of what I think might happen. We've only seen price move strongly to the downside. I will need to start seeing a bounce higher that fails to break those highs and then moves lower. And at that stage, again, if I think I'm dealing with a corrective move, then I'll use my shift pitchfork again. And then quite often you'll see we have low median lines or low red warning lines, in this case in the market moving low, assuming it's a correction. They quite often meet up with important fib retracement levels as well. So you've got a bit of a confluence between your fib ratios and your median lines of a pitchfork. So still a bit early days here to say whether this is corrective. Maybe price just shoots back up again. I think things are obviously very volatile, has been for the longest time. Normal quieter situations, you get nice little moves like this, zigzags, but in very volatile conditions you can kind of get this sort of strong moves up followed by like a V-shaped top down, immediately followed by a reversal to the upside again, with very little like zigzag behavior in between. But it is what it is. If we do get some sort of a nice zigzag behavior, I'll treat that as a potential corrective move, i.e. expecting that we might see a higher low with another potential stronger move to follow to the upside. All right, hopefully you guys understood what I said there. See, I've got a comment from Erwin, is okay. Cool. So that is pretty much a quick analysis of what I'm looking at the moment, guys. Again, if you've got any more questions, then please let me know. Otherwise, I quickly got to shoot home and attend to something that needs to happen there quite urgently. And if not, if there's no more questions, then as always, I'll be back soon again. And just please note that because of the long weekend in the US, there will be no morning bell on Friday. Right, cool. I think that's it for today. Thanks very much, guys. I hope you all have a fantastic rest of your day. If you do celebrate Thanksgiving and taking a long weekend, hopefully enjoy that with family and friends and have a nice, relaxing one. Until next time, take care and goodbye.